when I'm going, right?
Correct. All right. Well, good evening, everyone. Thank you for joining us for our Keys to Home Ownership webinar. My name is Natalie Nahas, and I'm the Senior Business Development Officer here at the Los Angeles Police Federal Credit Union. If you're joining us this evening because you're interested in buying your first home, making a move-up home, vacation home, or want to retire in, then you're in the right place. Our goal with this webinar is to give you an overview of the home buying process, make you aware of the things that you need to know about, your options and decisions that you need to consider to make that informed decision about what may very well be the biggest financial commitment that you may ever make. So before we get started, I'd like to mention that this session is a live webinar and the recording will be sent either tomorrow or the following day. And you will be in listen-only mode. So if you have any questions, we encourage you guys to submit the questions in the Q&A box, and we'll get to them at the end of the session. Our presenters will address them, provided that we have time. And so, like we mentioned, encourage you guys to ask questions along the way, specifically if there's a slide that interests you. Okay, on to the exciting stuff. You may have registered for tonight's evening webinar because you were interested in winning the Ring Doorbell Echo 5. So that complements our HomeAdvantage partner called HomeAdvantage, and they are our credit buying resource. One lucky attendee this night's webinar will be selected, provided that you watch the entire webinar from its start to completion. Must be over 18, and we will mail the prize to one random winner either tomorrow or the following day. So good luck, everyone. Be sure to stay tuned. Now what I'd like to do is introduce our presenters for the evening. First up, we have Mark Dolby. He is the Client Growth Manager at HomeAdvantage. So Mark's career includes 20 years of mortgage banking and servicing experience with a track record of successfully developing new business and managing high revenue client relationships. He has worked with many credit unions around the country, helping members save money when it comes to buying and selling real estate. He's talented, he's personable, professional, and focuses on building relationships and integrity. Also joining us tonight is our very own Veronica Moskowitz. She has been with us for 6 years. She's the Assistant Vice President of our mortgage operations. Prior to that, Veronica's experience in working with the mortgage industry spans over 20 years, which includes overseeing national operations for some large organizations. So please join me in welcoming the both of them this evening. And now I'd like to turn it over to Mark.
All right, fantastic. Thank you. I didn't realize I had such a long bio, so I'm gonna have to shorten that one up. Thank you so much, Natalie. Hey, Natalie, I'm gonna need you to run the PowerPoint deck if you don't mind. I'm having a little bit of a technical difficulty over here moving the slides, so if you can help me with that, that'd be fantastic. So today's agenda, it's really looking at, purchasing a home and what that journey looks like. So we're gonna talk about what making the right decision looks like, selecting the correct real estate agent, what the purchasing process looks like, really, dialing in and finding the right home. That's kind of the fun part of all this. We're going to talk about some market trends and financing options and how you qualify, and just give you a well-rounded view of the process. So let's go to the next slide. Alrighty, making the decision to buy, that's always a big deal, right? So we'll look at the whole process, renting versus buying, which one might be the better option for you. What your income needs to look like, what kind of down payments are out there. The market's pretty hot today, so we'll go over interest rates. I know that that's a hot topic right now with the Ukrainian war and the market going up, but we'll talk about interest rates a little bit and really reasonable prices and just look at the market itself. All right, renting versus buying. I was told this old Chinese proverb once, and it's when is the right time to plant a tree? And it's now, the present time. And it's the same way with the house. When is it the right time to buy a house? It now, or it might be good for you to rent too. I mean, when you're looking at renting, you got freedom to move, right? You have no tax benefits, so that's kind of an issue. less responsibility because somebody else owns it, but you might be forced to relocate, and you have property restrictions. So renting can have its limitations, and there might be a positive place for it. But buying, really it's harder to pick up and go. So once you buy, it's a full blown commitment, right? I think we all understand that. Once you own something, you own it, and there's fantastic tax benefits once you own a home. A lot more responsibility. I'm a homeowner. I know that homes, like my brother said, big homes, big problems, right? So homes are a lot more responsibility, but you gain equity. And I think that's really the biggest key, right? It's kind of like that. When do you plant the tree? I mean, you need to gain that equity, and buying is I think a great option. And then you have a lot of pride in ownership. Anytime you own something, whether it's a house or a motorcycle or just anything, right? There's a lot of pride in ownership. So kind of two sides of that. Let's move on. All right, income. This is important. In anytime you make a major purchase in your home, is usually the largest purchase of your life. It was for me, or it is for me. And so really you want to look at your income, unless you're purchasing your home with cash, which I know that a lot of people aren't these days, unless you're an investor. You really need to prove to a lender that you have a steady income. So really focusing on that as you're starting your journey, looking at what your income is, I think is really important. It's a good place to start. Let's go to the next slide. Alrighty, interest rates. Interest rates right now are a little volatile with the Ukrainian war, but really what we want you to understand here is the interest rate really means the consumer does not pay really as much of a finance charge, which saves you money. So lower the rate, lower the finance charge, lower the payment, right? So you save money. So you're always going to want to get the lowest rate that you can qualify for with anything. So you're paying a lot less interest. So lower rates, lower payments, and gives you much more purchasing power. And that's the big thing in today's market. The lower rates have really allowed members and borrowers to buy more house than they may not have a year or two. All right, let's go to the next slide. So how much can you afford? I know in California that's a little bit of a loaded question, right? But the old saying is you should be able to afford 2.5 times your annual salary. I know in California I have to look at my wife and I as a combined income, and so when you're looking at how much can you afford, you really want to keep it to that 2.5, 3 times your salary max, maybe a little higher if you and your significant other are both working. One of the things that's going to happen as you're looking for financing for a home is you're going to have mortgage calculators. They can help you determine a couple of things you'll hear when you start looking at loans. You'll hear income, debt to income ratio. You'll hear what your new payment will be like with all your other bills. So how much you can afford is a good place to focus. There's tools online. I know on the credit union HomeAdvantage website, and I'll talk about that a little bit. There's some really cool calculators that can show you what you can afford, so you can kind of play around with the purchase price. But it's an important part of the journey here of what you can afford. Finding the right home, location that fits your lifestyle, right? That's always the big deal. And I know now with COVID, people are in their homes more. I'm working out of my home now. And so a location that fits your lifestyle is really, really important, obviously. And what do you do? Make a list of features you want in a home. I know that I do that, or I've done that when I've purchased homes. It's kind of like a vision board. What are you thinking you might want? So you make a list of features that you want in a home. You might drive around a potential neighborhood, go there at night, go there at day. Do that kind of thing. You search online. I know that's the big push these days. Is there's a ton of money being poured into financial technology, real estate technology, going online, looking at homes. I'm going to show you later insulated within the credit union, fantastic way to search for homes through HomeAdvantage that is insulated. So all your information is within the credit union. But finding the right home is kind of the fun part, I think. So let's go to the next slide. Making an offer. This is in today's market can be hard on members and borrowers, but some of the things that you're going to want to think about and look at when you're making an offer is your agent's going to really help you. Now, if you end up utilizing the free member benefit that you have at the credit union here, HomeAdvantage, your agent will help you quite a bit, right? I know all of them. They're fantastic, but they're going to provide you comps. Look at different homes around. They're going to get you pre-approved before you shop. So steer you back to the credit union or another lender of choice, right? But they'll help guide you, the agents do, but you're going to want to think about when you're making an offer, is it too low? Is it too high? Should I factor in counter offers? I think today's market is really competitive. So putting a lot of thought into this and really partnering with your agent, your HomeAdvantage agent, the ones that I work with, are just amazing. And they can really help you. Like Santa Clara, Northern California, where I live, might be a little bit different than Los Angeles County right now. And so your agent can really help you determine whether your offer should be, right on, asking price a little higher. You're also going to want to look at making offers on multiple properties, possibly before you get one. I know that sometimes that can be make you a little nervous, but follow your agent, and at the end of the day, I see some of the questions going over on the bidding wars and all that, and I agree. The market is absolutely on fire in California. And one of the things I would say, that, because I don't want to take too much time on the webinar, is if you utilize HomeAdvantage, we as a program are going to really help you through that process, right? And help guide you. But your agent can help you with all of these, but making the offer is key. Just like some of the comments are saying here on the questions, is it's a hot market, and so you really want to be strategic, right? And when you make that offer, so very important part of the process here. Let's go to the next slide. All right. So when you look at the purchasing process, you can look at an offer is accepted by a homeowner. You're going to end up making a deposit, right? They'll open escrow. It might be a 30-day escrow, might be 25-day, but escrows are typically in this hot market, like some of you are experiencing, are shorter, right? But they'll open an escrow for a period of time. You'll receive escrow instructions. Your agent will really help you a lot in this process. None of us are escrow lawyers or want to be. I know I don't want to be. But your agent helps you a lot with the escrow instructions, and escrow coordinates closings. So it's some states, they have lawyers that do the closings. Here in California, it's an escrow state, so we have escrow companies that help us with the closing and all the parties. So that'll be a part of the process. Let's go to the next slide. So you'll complete the paperwork, and unfortunately in 2022 there's a lot of paperwork, a lot of disclosure. So you'll work on the paperwork. You'll receive estimated closing costs from the credit union or another lender that you might have chosen, right? So you'll look at property appraisal. That's another thing in today's really hot market that's volatile, right? I know in Northern California, there's a lot of, hey, that, people are paying, 100 grand over a property because it didn't appraise enough. So they're making up that difference in cash. You really want to be careful with those types of situations and getting too tied to one property and going a little too far. But you'll see appraisals. There'll be property inspections to make sure the home is, sound. You don't want to buy something that may have a hidden problem with it. You'll look at insurance. Documents are created and signed, so you'll be signing many more documents. A lot of them are DocuSign or not necessarily in person. You might do a lot of them in person. And then you move in, and that's the greatest part. I can remember when I first got my keys to the house I'm in here, that I'm sitting here now, and it's a great moment, and that pride of ownership is pretty amazing when you get your keys. Let's go to the next slide. So moving up or buying a second home, I see this market a lot with credit union members that have taken advantage of some of the equity that's out there in their homes and moved into a kind of a nicer second home. So you might need a bigger home. I know with COVID, that's created a lot of need for families to have a bigger home. You might be buying a rental property, right? You never know. I think rental properties are great investment. Once again, it's the when do you buy real estate now? It's a great investment. So you might be looking to buy a rental property or a vacation home. But all of the things that we discussed here, you'll deal with the homes that we're showing you here. So let's go to the next slide. You might get a retirement home. I know, you might want to live near kids or grandkids. The one thing I would say about your free member benefit, HomeAdvantage, and not to plug that constantly, is that it's a nationwide program. So if you're moving to a different state to be closer to your kids or your grandkids, HomeAdvantage can help you. You might be downsizing, right? And that's, I know that there's many people in the Northern California area that are selling their homes and really downsizing. Their kids are gone. You might go to an active community. I know that I threaten my wife all the time. I want to go to one of the golf communities, one of the Del Webb Sun City golf communities, and drive a golf cart around. So you might buy a home in one of those. Let's go to the next slide. Let's talk about current market trends. It's like I said, it's pretty volatile right now. I just listened to an economist in the Northern California Credit Union Networking Association, and he was an amazing speaker. He was talking about inflation, and I thought that was really interesting because inflation is dominated in the news, and it's at 7%, I think is what it came in last month. But inflation is running high, but all of Wall Street expects it to kind of level off, which is, that's what they're saying. So I think inflation is going to come down. What's the market going to look like? You never know. So ultimately, you really, if you have the ability to get into the market, it might be the right time. But you want to look at interest rates. You want to look at what the market looks like. You really want to talk to people, talk to your agent. They have a wealth of knowledge of, hey, should I get in now? Should I maybe not get in now based on what the market looks like? So when we have things like this war in Ukraine, I think it kind of puts everything into a little bit of a flux here with the market. But overall, all the predictions in the market seem to think it was going to be a pretty level 2022. So things that you're going to want to look at as you go through your process here of your home journey search. So you're going to have lender considerations. I mean, obviously, we want you to choose the credit union, but they don't have every single program. And so when you look at a lender, you really, it's like anything in life. You want to look at people that are responsive, trustworthy. They've been in business many years. I personally like to look at my sphere of influence and ask friends and family, have you ever used them? Has anybody used this person? I know I've dealt with, your credit union a lot. They're fantastic. So, just when you look at a lender, I think it's really like anything that you buy. Try and remove the fact that it's just all the money, because it is a lot of money and it's hard not to look at that. But how long have they been in business? Are they reputable? Do I get good reviews or good recommendations from others? But you really want to be careful who you choose as a lender, and make sure that you're not giving money, things like that, because there is fraud out there and you need to protect yourself. And so just be aware of what you're doing with lenders. Right, let's go to the next slide. All right, HomeAdvantage, my favorite slide. I know I've talked about it a little bit. What is HomeAdvantage? It's a free member benefit to you as a member of the credit union. And it's really think of HomeAdvantage as your credit union's one-stop shop for real estate. It provides some amazing tools for you to use. And I just want you to be aware of it and use it. So the first bullet point there is the URL to your co-branded website. So you could just copy and paste that into your browser. It would take you to your HomeAdvantage website. It's really simple to register. It's a name, email address, and phone number. That's it. Everything is centralized within the credit union. What happens when you use that website to search for homes is you have a private MLS portal to search for homes. And why I think that's valuable, I've been with HomeAdvantage for a while now, work with a lot of credit unions. And when our members go online to Zillow and Realtor.com and everywhere else, your information is sold. And when you use the home search tool on your credit union's HomeAdvantage website, none of that is sold. It's all insulated within your credit union, and it's a true MLS feed, meaning you're seeing all of the listings that are out there. Nowadays, Zillow, I know Zillow's doing this, a lot of people are starting to do this, is when you go in and you put in a home search, they're filtering where they want to send you. So I think it's a real advantage to go to the website that HomeAdvantage provides for you and the credit union provides for you, because it's a safe place where your information isn't sold, and you're really getting a true MLS feed like a mortgage broker would. So you're seeing every listing out there without any filters on it. It's a fantastic tool. It's easy to get registered. You can opt out anytime you want. We don't sell any information. We partner with the credit union. We're owned by credit union. So it's a great place for you to go. Good, safe place is what I always like to say. So, but you can set up alerts for properties. We had a lot of new functionality this year or last year in 2021 for home searches, where you can save a ton of home searches. You can get home valuations sent to you and emailed over to you. There's a lot of slick tools on that site. You can do all kinds of calculators on your lender said my debt to income needs to be X, like it needs to be under 42 or 41, or they might give you a number. You could play with it on some of the calculators on the site. One of the fantastic benefits of this program is that we provide a cash reward to you at closing if you use the HomeAdvantage program, use one of our agents. So you're going to earn a cash reward. On average, it's a couple $1,000s. It's all based on the purchase price of the home. It's actually 20% of the agent's earned commission, but there's a calculator on the website, once again, that you can go to, and you could play around with it and say you looked at a house that was $600,000. It would show you what your cash reward, I think that's like $3,000 or something like that. Anyway, it's a significant amount of money. And so earning the cash reward as a member of the credit union, HomeAdvantage was created to help credit union members save money when they buy and sell real estate. And so that's what that cash reward does. So I recommend you try it out. It's fantastic. There's a lot of tools that the credit union's providing for you. Trying to make sure that get back, make sure you have real estate tools, because this journey, like we showed, is can be long. And I'll be here to answer any questions after other parts of the presentation. But I believe that's my last slide, and I think we're gonna send this over to Veronica. But I'll be here for any questions afterwards. So feel free to hang out and ask them.
Great job, Mark. So my name is Veronica Moskowitz. I am the AVP of the mortgage department at LAPFCU, and I'm so excited to be presenting the mortgage loan portion. Oh, I have to turn my camera on. 1 second. There we go. So I will be presenting the mortgage loan process of the presentation, and my goal tonight is to educate you on the financing side of things and definitely prepare you for the purchasing of your home. Now, the happy part, unfortunately, is when you're out shopping and having fun. Who doesn't like to do that? And the loan portion is not always fun and exciting. So what I have found is that if the more educated you are, the easier the process is. You learn the acronyms. You know what we look for, you know the qualifying process, and it just makes it a lot easier. So these are the topics we're going to be discussing today. And I'll go over each one of these things with each slide. Okay, so let's start with the pre-qualification and the difference between the pre-qualification and the pre-approval process. They are very different. And it's important to know what the difference is. As real estate agents really prefer to see a pre-approval. And the reason behind that is we do require that you submit income documentation, bank statements, tax returns. We're pulling your credit. And so basically we have everything in front of us to be able to make a commitment to lend you, to finance you for the property that you end up finding. What I do recommend, and I think is extremely important, is that when you begin looking, or your interest in buying a home, when it's a matter of a discussion, is that you ask for a pre-qualification. And what we do at that point is you state your income on the application, we pull your credit, and we take a look at whether you qualify or not, but it's a very light qualification. It's not a true commitment. And it's a perfect opportunity to address what's on your credit report, whether some items have surfaced that you weren't aware of. That'll come up in the credit report. So it gives you some time to work on some of the issues that you might not have known about. Also, it's a great opportunity to see what your middle FICO score is. And when we underwrite your file, we qualify you with the middle of the 3 scores. So we pull your credit report from 3 credit bureaus, and we take the middle score. Now, if you're applying with your significant other, we take the lower of the 2 middle scores. And that's not always a happy discussion, but that is the way our investor guidelines are. So I urge you to either pull the free annual credit reports and take a look at what your finances look like that are reported on your credit, and begin working on that. The minimum credit score to purchase a home is 680. So look for that. The middle score needs to be 680, and if it's not there, we'll talk about a little later on the slide what you can do to work on that. So what I'd like to do next is discuss some of those acronyms that we spoke about earlier, and that's PMI. So that's private mortgage insurance. And anytime you are unable to put 20% down, you're required to have mortgage insurance. And so at that point, it's almost like a two-step lending approval process, because we as a lender are underwriting the file, but also the mortgage insurance company needs to approve it. So they're approving to cover you in not having the 20% down. So at times we have to deny a loan that we may primarily like, that we would probably do at the credit union if you were able to do 20%, because that's all we can control is up to 80%. And then after that, it's in the hands of the mortgage insurance company. So at that point, our hands are tied and we have to issue a denial because the mortgage insurance company could not insure it. So again, they do basically the same stuff we do: FICO score driven, debt to income ratio driven, and the amount that you're putting down. The other topic here that I have on the same slide is the loan to value. So I did little formulas. You're going to be able to download this PowerPoint presentation. So I wanted to add the formulas here of how we do these calculations so that you can play on the calculator that's in our website, in the HomeAdvantage website, to help you see what you qualify for. And just to go back a little bit, this question is asked often. What income are you to put on the application? We want you to put your gross income, so not what you net, what you take home. It's your gross income. So that's helpful. So going back to the loan to value, oh, well, we did basically talk about that. So it's whenever you don't have 20% down. And then I added the calculation right below that. You basically take the loan amount divided by the sales price, and that's where you come up with the loan to value. I hope that's helpful for you when you're driving around and you can pull your cell phone and do that yourself and tell your real estate agent to pass on that one. Okay, so we're ready for the next slide. Okay, so I am a huge advocate for being all over your FICO score, and I educate kids in night school and high school. I do night school presentations on your overall credit profile so that I can get their attention before they leap into that age of 18, because at that point they can walk into a bank, they start college, and everybody, they're like sharks, here's your credit card, open this credit card, and before you know it, your kid is 18 years old and in debt. So I like to educate them on how basically it's their lifeline. If they take care of it, they can buy a car, they can rent an apartment, they pull your credit report for that. And so basically it's very helpful when you're in trouble and you can walk into a bank and say, I need a credit line. It's when you want to get engaged, when you want to have a wedding. So everything is tied to your FICO score. So it's important to take care of it with your first credit card. So basically here are the rules around that. Pay all your bills on time. I like to set up auto pay so that if something were to happen to me for a couple months and I'm not all there, my bills are being paid, at least the minimum payment is being paid from my account, and I don't have to think about it. Especially when we get so busy, we're like, did we pay the Capital One card? So actually, did we pay the LAPFCU card? So it's nice to be able to set them up on auto payment. Even a 30-day late really hurts your credit. So the other thing is don't max out your credit cards. What we end up doing is we look at your total credit line. So it's your max credit line on all of your credit cards. And then we divide it by the balances that you have. And if that's high, then it affects your credit score. While you're doing the mortgage loan process, do not take out new debt. Don't get excited and go and buy washer dryers. Don't do that. Don't buy a car. That we've seen that, and we've had to deny the loan midway purchase. So just keep your credit as we qualified you. You can definitely bring it down, but don't take new debt. The other thing is you want to keep the oldest credit card. So when you get in this mode of purchasing a home, you want to pay everything off and not have any credit. That actually hurts you. So you want to keep the first credit card, even if you keep it open just to make it the oldest credit card you have. That's actually the FICO is also driven by that. That's one of the factors is they look to see when you started your credit. And the history of having credit and how well you have managed your credit. So keep the oldest one open, even if it's at 0, and then work with the other ones thereafter. And we talked about this. So the minimum credit score for a first-time home buyer is 680. That is absolutely the minimum. For our Heroes Home Loan that I will be talking about later, the minimum credit score for that is 700. So I wanted to have this on the PowerPoint presentation to make sure that you're in that medium. Okay, so this comes up a lot, and I thought that it would be really important to have in this presentation because debt to income ratio is such a hot topic when you are applying for a mortgage loan. So I've had people come back to me and say, I don't understand why I was denied. I have absolutely no debt. Except for my car payment. And so I don't understand how my debt to income ratio could possibly be over 45 to 50% range, because if it's not at that range, then we can't issue an approval. So that is 45 to 50% of your income. So the debt to the income cannot surpass 50%. And so the answer has been, yes, you're very good with your debt. I see that you only have a car payment for $500 a month. But what factors into your debt to income ratio is your new mortgage payment. And so we forget about that. So now we have to calculate not only your debt, but we're also now, and you can see that in the PowerPoint presentation. So now we have to add your principal and interest payment for your new loan. We have to add hazard insurance because you're going to have homeowners insurance. We're going to add property taxes, your monthly amount that you're going to pay on that. If you bought a condo or there's an HOA, we have to add that to your debt to income ratio. And we also have to add your monthly PMI to that calculation. So you can imagine a home for $650, the payment, that's the calculation that I did here, and the house payment was $3,800. And so if you take your $3,800 as your new mortgage payment and add your monthly debt of $1,000 and your income is $10,000, you're already at a 48% debt to income ratio. So depending on what you're putting down, it's as a down payment, it's really easy to get up to the highest debt to income ratio, which causes a problem. And it's really expensive to buy homes nowadays, and so it makes it that much tougher to be able to afford a home, but it's possible. So if you know that that's the way that the debt to income is calculated, it really helps you understand. And I tell people, just write it on a piece of paper. What's your debt that would be, not your utilities or anything like that. It's what shows up on your credit report. So if you do one of those free annual credit reports, you just begin writing your monthly amount, not the total debt, just what you pay monthly. And there's a row for that on the credit report. So start writing it down, divide it by your income, your gross income, and you'll be able to see what your debt to income ratio is. And then, if you do the HomeAdvantage calculator, it will show you what your mortgage payment will be. And so you'll be able to do that calculation and know what you can afford. It's really hard when you only have a car payment and nothing else, because what are you to do? Then you pay off, then you have to have money to pay off your car, which then takes money away from your down payment. So it's a real struggle, but I think it's really important information to know. And you're going to hear it often in the loan process, that your debt to income ratio is too high. And then we have to figure out this is the only ways you can lower it. You have to have more income, you have to reduce your debt, or you have to purchase a home of less value. So those are the only 3 ways to work with your debt to income ratio. I hope that was helpful. Okay, so LAPFCU has multiple products. So we do purchase transactions. Obviously, we do fixed rate. We have a 15, a 30, a 20. We do have adjustable rate mortgages. They're on hold right now. Sorry, my throat is, let me get a drink of water 1 second. So dry, I have to talk all day with the staff. Okay, so we do have our adjustable rates on hold at the moment, and that's only because LIBOR is transitioning to an index called SOFR. So once that transition happens, we'll open it back up and we'll offer adjustable rates. I have to say that our clientele, our membership, does not love that product, but we want to make it available if rates do increase and they get pretty high. The other thing is that in January, the conforming loan amounts changed. So now you can get a conforming loan amount up to $647,200. So that was a nice increase. That increased because obviously values have increased significantly these past years. You can get a high balance up to $970,000, $800,000, which this is incredible. When I first started in the business, it was $217,000, $500,000. Not to age me. And then we also do jumbo loans, and jumbo loans are over $970,000, $801,000. If you are on this call and you own a home, we are really busy with home equity lines of credit. It's such a great feature. We are probably the only credit union that has a HELOC of this type. So it doesn't have a draw period and a repayment period. Most banks and credit unions have a draw period of 10 years where you can draw from it and then it closes after 10 years. And for the following 20 years, you're repaying that HELOC. Ours stays open always. It's like a credit card to your home equity, which could be scary, but it's great because it's tax deductible. You can put a pool in, and it's a loan where you borrow $30,000 to do the pool, you pay it back, you have your credit line again when you want to then begin on your kitchen remodel. So it's pretty nice. And with the values increasing like they have, we are doing a ton of them. They're very popular, and we also have a fixed, so it's principal and interest payments, and we go up to 80% loan to value on those. Oh my gosh, I love the Heroes Home Loan. So it's for our sworn and civilian members for first-time home buyer, and first-time home buyer to us means that you haven't owned a property for 2 years. So so it's great if it's been 2 years, maybe you sold in a hot market and you decided to rent, and you're waiting for the market to, what they say, tank, but I haven't seen that in a while. and then you jump in and you want to buy and it's been 2 years, we consider you a first-time home buyer and you can do 100% financing. So there's no money that you put down. There's no mortgage insurance. We do not require it. It's our proprietary product. And this is phase 2 of this product. So we expanded it to a 40-year fixed rate option. And so it's really nice because we with the prices increasing like they have, we saw that our members were having a hard time qualifying for it. So we extended it another 10 years and it made a huge difference. And now we've closed quite a few, and it's so exciting, especially if you've never owned a property, to be able to get into 100% financing and not have mortgage insurance. It's truly making your dream come true, and it's just really exciting for us to be able to offer this product. If you want to know more about it, I actually did print the guidelines on this. And so the max debt to income ratio, and now you know what that means, is 45 for this product. We want to make sure that because you're not putting any money down, that you really can afford the mortgage payment. We don't want you to be so excited, you get into a home, and then, 2 years later, you're calling us saying, help, I can't afford the payment because my plumbing busted, my roof has a leak. And so we felt that 45% was very comfortable for most people, where they can still have a life outside of, just having a mortgage payment every single month. We require the property to be in California, so no out-of-state financing. Let's see what else. I talked about it being a 700 credit score. We require that you have 3 months of reserves, and that means 3 months worth of payments in your savings account. Again, just for backup. You do have to take the home buyer course, and we have that online. So if you go into LAPFCU.org, you'll be able to find the link to the educational program, and it's really good. I recommend that you take it. It's free, because it is so eye-opening, all the things to think about when purchasing a property, and also in having a mortgage loan. I think that's about it on that. You can also, there's closing costs. So you can get financing as a gift. And so if your parents, say, hey, I'll cover the closing costs, and you literally have now nothing out of pocket, we do accept a gift letter from a family member, a close family member. And so that covers your closing costs. So it's really exciting. If you want to know more about it, please reach out to me. I want to be there for you and answer any questions, because it's 20 something years later, I still get super excited when a loan closes and it's a purchase transaction. So it means a lot to us. Okay, that's it on the mortgage side. I will go ahead and cover the homeowner's insurance. And Maria is a representative here at the credit union for insurance needs. I actually have to say that I have my homeowner's insurance with her, and it went up $500 a year this year, and I was really, really surprised. So I called her and I said, I can't afford to pay $500 more a year. What happened? And she worked with me and said, why don't we increase your deductible? And she was able to save me $400 for a property that is not insuring at this point, because it's an area where there was a bunch of fires. So she's worth a call, and she's great to talk to. So you'll have her contact information in the presentation as well. Thank you so much.
Okay, hi everyone, I'm back. And right now what I'm going to cover is our end of watch debt protection. And what this program is a debt protection to cover debt that you owe with us in the event of the unforeseen taking place, where you die in the line of duty. Any existing debt that's owed to us up to the capacity of $850,000, which includes mortgages, will be protected. So then that way you won't have to worry about it being paid off, or who's going to pay for that debt. The protection will kick in and cover itself. It's complimentary, provided by the credit union as an added value to your membership. Hopefully this wouldn't be something that we would have to want to have happen, but in the event of the unforeseen, our members work a dangerous career. And so in the event that something was to happen where they are killed in the line of duty, this protection would kick in and cover, their existing debt with us, up to $850,000, like I mentioned. Now, we are the only credit union or financial institution in the nation to offer it to both sworn and civilian personnel. So very unique to the credit union, I will preface that. One of the things I get asked a lot out in the field is, will existing debt be covered? And the answer is yes. However, we need you to activate it. And how you do that is by taking on a new credit line of whatever sort, like whether it be a car loan, personal loan, credit card, at the level of $10,000 or more. So then that way it can activate the protection in order to roll in all your existing debt with us. So that's something, added values for members. Hopefully you never have to need it, but it's peace of mind for your family, and it's complimentary. So there's more information about this program on our website, but that's just an added value that we rolled out within our sworn and civilian suite within the last year. So that brings us to the conclusion of the webinar. And now I want to invite back both Veronica and Mark to cover some questions. So I'm going to go ahead and read out some of the questions, and then I'll throw it back out to either Mark or Veronica to answer. So I will read out one of the first questions. I guess the hot topic today is the rates, right? So one of the questions was, can you talk a little bit more about the Fed rates increasing today? So Mark, you want to speak on that?
Yeah, absolutely. Thank you. I know there's a lot of uncertainty right now, and we've come out of a period where the Fed had kept the Fed rate at zero for a long time, so rates were really consistent. There was a quarter point Fed rate, so it's up to 0.5 now. How I look at this is, yes, rates are going to go up a little bit. I'm kind of an older guy, so I remember when I looked at buying my home 20 years ago and go, oh, I got a 7% interest rate. I thought it was great. And so at the end of the day, rates are going to creep up a little bit. And what I would just say is, mortgage interest rates, and some of you know this, but they're tied to the 10-year Treasury rate. So you can really look at that. As that 10-year Treasury bond creeps up just a little bit, you'll see mortgage interest rates creep up a little bit. So you can kind of just, watch that, and rates are going to creep up in the mortgage game a little bit. There's going to be some uncertainty. The Mortgage Bankers Association forecasted 2022 to be very stable in a purchase market. Now rates were going to rise a little bit, a 0.2, but it's not a lot. And historically, I know 20 years ago, I would have loved to see a 5% rate, right? So at the end of the day, rates are going to creep up a little bit. And, when we have a fluid environment like this Ukraine war, oil prices, although oil's been down all week, which is good. So we'll see. Most of Wall Street expects things to smooth out a little bit. So from everything I'm seeing, I see rates going up a little bit, just slightly. But look at the 10-year Treasury bond. That's something that you can track and equate it to what mortgage rates are going to do.
Thank you, Mark. The next question's a two-prong. First being, how do you handle the 20 bid wars with people paying 100K over asking? My last 6 bids with houses asking for $799 all went over $1 million. Seems a bit like a guessing game. So the main question here is, how would you handle that situation?
Yeah, well, you have to have a lot of backbone, right? I mean, there's actually a thing out in the marketplace today. It's called borrower fatigue, and it's true, and it's because the market's so hot. And I saw this question, and I I talked to our agents quite a bit, and ultimately, all of these situations are a little bit different, right? And they're all dynamic. They're happening very quickly, and so are there situations where you have to maybe not make an offer on a house because it's so hot that here's what I would say. You've got to work closely with your HomeAdvantage agent. That agent can let you know, hey, here's where we go. We go 40K over asking, and this is going to happen, because they understand the situation. So I don't think there's any magic answer to any of that. Each one of these situations are their own dynamic, fluid situation. What I would say is it's very, very hot, right? And so what you have to do is be strategic about what you're offering and what you're willing to not offer. I hear that quite a bit from our agents. You have to, if you feel like this is the house you want, pick that number. If it's 100K over asking, you give that number, right? But that doesn't necessarily mean you're going to win it, but you're strategic in how you're going about it, and really rely on the agent's experience. If you use the HomeAdvantage program, the agents that we have are 15 years in the business. They've been in the cycles when the mortgage industry crashed in 08 when I was in it. And it just, I don't know. You got to really look at your agent, your professional, to help you with that current little market condition, whatever that neighborhood is, to help you understand what's the best ask that I can do here. And there's going to be some fatigue, right? It's just a hot market. But the more you can coordinate with your HomeAdvantage agent, the more you can strategically pick some numbers and stick to those. And I know this is hard, but try and not get emotionally connected to what you're doing. It is a business transaction, and it's the biggest one you're ever going to do. But it's a great question, and I know that's a very difficult position to be in. I see the market settling down as rates start to go up. The market's going to settle down a little bit, in my estimation. So that might lessen a bit for y'all.
Great, thanks, Mark. Okay, the next question is probably geared towards Veronica, and it says, do pre-qualifications affect your FICO score?
Very little. I mean, it could be 3 points. So we definitely asked our credit bureaus the effect of that, and actually the other question that we asked them as well was, if they rerun their credit, say 90 days later for same thing, a mortgage loan, is it then going to affect it another 3 to 5 points? And they said no, up to 120 days. If it's the same type of inquiry, being a mortgage loan, that your credit score will not be affected.
Great. Okay, we have another question in the same sort of category. Does a pre-qualification, is it a requirement before you can get pre-approved?
No. Absolutely not. So I think that it's important to know that if you're going to ask for a pre-approval, that we are going to ask you for a lot of documentation. We are underwriting the loan completely, and so it could be cumbersome in trying to get everything ready, pulling all your files, and so I would do that when you're very close to making an offer, and you want to be sure that when you submit that offer, you have a commitment from us to lend. Whereas the pre-qualification, you're still playing around. You really want to know where you sit, what your FICO score looks like, what your debt to income ratio. We'll do that calculation for you, and we will offer, if you qualify, we'll offer you a pre-qual letter. The only problem is that real estate agents may ask you to turn around and go back to the lender and get a pre-approval, because it's a more affirmative approval.
Thank you, Veronica. The next question is geared to the Heroes Home Loan, and it asks, is it open to former LAPD and current city employees?
So it's for active, let me think.
I can answer that one.
Okay,
Veronica,
thank you.
again. So it's actually currently active for active sworn and civilian personnel, must be within law enforcement. So city employees, if they're civilian staff but within the police department, absolutely, but not city employees that are within the city of LA that don't have ties to the police department. So it has to be law enforcement, sworn and civilian, active, both on the sworn and civilian side, with not only just LAPD, but other agencies within the field of membership. All right, hopefully that answers your question. There's another question here. What's the name of the program to take online again before we can get the Heroes Home Loan?
So it's a first-time home buyers program, and you'll see it when you go to lapfcu.org under mortgage loans. there's there's a Heroes Home Loan, what do you call that, option, so that you'll just select it and it takes you right to that area. It talks about the program and then it has the link.
Great. We have another question that asks, can we download the slideshow? Actually, I can possibly email it to you. We will have a recording after today's event. It should be emailed either tomorrow or Friday. But as far as the slide deck, we can get that to you, Francisco. So I can send that to you on the back end either tomorrow or the following day. Okay, can retirees apply for Heroes Home Loan? I think we answered that prior. It actually has to be for active sworn folks, sworn and civilians. So unfortunately, does not apply to retirees. Sorry about that. Okay, another question here is, how does the real estate agent connect with HomeAdvantage if they were looking to collaborate with that platform? So I guess the whole idea is if there's an existing real estate agent that a member's working with, can they connect with the HomeAdvantage platform? So Mark, would you like to speak on that?
Yeah, absolutely. So you would just reach out to me. If this PowerPoint deck, I believe it's going to go out to everybody. So my email address, my phone number. So just reach out to me. One thing I would say also about HomeAdvantage is for selling your home or buying a home. So you can earn a cash reward if you sell a home also. So I just wanted to make sure I threw that in there.
Great. Okay, the next one, I think, Veronica, you covered this in the presentation, but if you want to touch on it again, is the Heroes Home Loan Program offered to first-time buyers? What defines a first-time buyer?
Yeah, so we call it first time home buyer program, but it's so it's if you haven't owned a property in 2 years. You might have owned a property. I hate using this scenario, but then you got, you were divorced and then you rented for a little while, and 2 years later you're ready to buy again. We consider you a first time home buyer. The other thing that I wanted to touch on that I missed in the presentation is income. So employment history, sorry. So we always look back 2 years, and then we actually have to look forward 3 years. So we often get new police officers who just completed the academy and have been, they're now working at a station, and they're so excited and they apply. We do have to have a 2-year history. So it doesn't have to be, obviously you've never been a police officer before. So we're looking for some type of history and income that for 2 years. So even if you worked at Walmart, and then CVS and then bonds, we're just looking for 2 years of income. And then obviously we'll take your new income and look forward to see if it'll continue for 3 years. Another scenario in that, sometimes we get police officers that are getting ready to retire, and they will want us to qualify them on the income that they're earning today. But then we're told that you're going to retire. And then at that point, we have to qualify you in what you're going to get at retirement. And sometimes it's not enough. So just know that, maybe apply for the loan before you retire, and then you can retire later. We don't know that. And we're able to qualify you on the last 2 years of history.
Great. Okay, the next one, I think we covered this already. Can LA County firefighters use Heroes Home Loan? Unfortunately not. The program is only applicable to active sworn and civilian law enforcement in the form of like police officers or civilian staff or professional staff associated with law enforcement agencies. One question here regarding the interest rate on Heroes Home Loan. Veronica, would you like to answer that one?
So, we talked about this in my meeting today with the staff. So rates today went up, and a 30-year fixed is now 4%. It's still very low. We talked about how the Heroes Home Loan has not increased along with that. And so if you do a 30-year, the rate is 5.25, And there's risk built into that. You're not putting any money down. And so if values decrease, you're going to be over 100% loan to value pretty quickly. So the pricing, we're asked often why the pricing is different than your typical 30-year fix. We're building in not having mortgage insurance, the risk of having 100% loan to value. So the rate on that is 5.25%.
Great. And I think we've got like room for one more question, and this will be our last one for the evening, just because we want to be mindful of the time. What's the difference between a VA loan and the Heroes loan?
The VA loan, you need to be a veteran. So
Okay.
I do know that the veteran, the VA loans do go up to 100%. They do have that, I think it's called a guarantee fee that is equivalent to mortgage insurance. And so that can, create a payment that it's at times not affordable. But I definitely would look into that and compare to what we have to offer and see what works for you.
Great. Well, thank you very much, Veronica. I think that's it for this evening. It's top of the hour at 7 p.m. We want to thank you all for joining us tonight. And if you have any questions, concerns thereafter, feel free to reach out to either Veronica, Mark, or myself. And look forward to the recording in the next few days. Thank you and have a blessed evening. Good
Thank
night.
you.
Take care, everybody. Bye.
Bye.